Hello and welcome back to the Complete Scalp Trading course by Wealthy Education. In this video, we'll talk about Bollinger Bands. So to put the Bollinger Bands on your charts, you need to click on this symbol here. Now, you can favorite particular indicators, and as I type in BOLLINGER, you can see Bollinger Bands. Now, there's a bunch of other ones as well, but you can see this is already favorited. You click on the star as you highlight it to have it as a favorite. Go ahead and click on that and it will appear. And you can see that it is an overlay, meaning that it goes in an overlay of price. And a Bollinger Band is a representation of a bell curve, basically. If you remember from school that something like 96-ish% of all numbers in a set occur within two standard deviations. That's all this is. And it's using the 20 SMA as the median. So in other words, when price goes all the way up here, it has broken through the +2 standard deviations and -2 here. This is your median. So the idea, of course, is that if you get overbought, you should swing back towards the median, or if you get oversold, you should. That's really all you're looking at here. I know it looks a bit complicated, but it measures your volatility. So, for example, notice how thin it is here, but how wide it is here. Well, the reason being is price is moving. You can see how violently it's moving here, and it's broken out of these standard deviations a couple of times. Well, what does this mean? Well, this means that the market's overbought. So some traders will short and try to go back to here. Some will get really aggressive and try to go back to here. But the idea is basically you're looking to get back to normalcy. You can also see that it sometimes goes sideways. In this scenario, not as exciting, quite frankly. You can see that we have broken through here, and it took a while to get back to here. So you do have to use, some other things with this a lot of times, mainly support and resistance. Notice how we got oversold here, we went back. We got oversold here, we went back. So you're getting the idea that a return to the norm is generally favorable. And like I said, you can use the bands for consolidation trades, but quite frankly, most of the time you're better off just using plain support and resistance in forgoing the bands. The wider these bands are, the more likely you are to see violent swings. So you need to keep that in mind, perhaps when position sizing. So let's take a look at several examples. And there is something called a squeeze that you need to pay attention to. So notice how tight the market got. The idea is that we will break in one direction or another. And there are some people that's all they use Bollinger Bands for. When they get really tight like that, that's a sign that the market's about to move. Because sooner or later, momentum picks up, and you can see we surely did. Pulled back and then drove higher. Drifted lower, pulled back, drifted lower again. That compression is a sign that the market might be building up tension. So that's called a Bollinger Band squeeze. And traders sometimes will just use that, and then they'll have a target based upon support or resistance. Let's go ahead and look at the euro dollar. And on the 15-minute chart, you can see that we had gone sideways and all of a sudden pierced that and then did what they call walk the line. Walking the line means that you're just heading right along. So what happens is some people will use this because we did squeeze a bit there. They'll use that as an entry. And instead of looking to get back to the median, they'll put a stop loss there. And they'll just let it rock and roll until it takes the stop loss out, which is all the way up there. That's a 100 pip move. That's a big move. Now, as a scalper, are you going to do that? Probably not. But notice how here is a squeeze, and then we get a breakdown. We walk the line. So you could take a break of this support level here. Notice that it comes back here and short it again. Short it again. Your stop loss is easy. It's just on the other side of those candlesticks. So those are a couple of examples of how you might use it. Let's go ahead and take a look at JP Morgan. Squeeze, boom, huge move. Overdone, obviously. You expect to move back here. You get it. Nice squeeze, and then we grind higher. There does come a point where there's a little bit of artistry involved. You know, on a move like that, and we start falling right away, it's not uncommon to fill gaps. And that's exactly what we did. So when you get that insane of a move, it's not necessarily out of the norm to expect a return to the median. I'd also point out, notice where it stopped. It stopped right there. This is a 5-minute chart, so you can only read so much into 5 minute support and resistance, but notice how it was important back there as well. So that gives you an idea of how Bollinger Bands are used. Some people just use them for the trend. They're used in so many different ways. It's almost impossible to go through them all. But the main takeaway is volatility. How volatile are the markets? The wider it gets, the more volatile it is. The moving average in the middle. This is the average price of the last 20 candlesticks. It tells you the directionality of the market. Are we overdone? Are we oversold? That type of situation. And like I said, I will walk you through some examples in the next video with Bollinger Bands. This is one of those indicators that people either love it or hate it. So experiment with it, see how you feel about it. It's perfectly acceptable to use some or all of the indicators in this course. Bollinger Bands do tend to, for myself, I really like the squeeze because it tells you something's coming and to pay attention. So for example, take a look at this squeeze. Look how tiny it was. And then all of a sudden you got this big bar or big candlestick. So that tells you something's up, right? A little bit of resistance there. And then you got another one there and a huge gap. So if nothing else, I do like that aspect of Bollinger Bands. And in the next video, I'll give you several examples from which you can learn.